Okay, without further ado, we will kick off. I'll share a screen and some slides. And okay, hopefully everyone can see the slides.
Yep, can see them all good.
Yep, perfect.
Thank you everyone for attending. We will try to keep this to about 40, 45 minutes maximum so that we can have some time for questions. And so that's my background. If you can have a quick look, some of you would have already seen this, but I've had a long career in banking and currently run a real estate company called Nivas Real Estate. This session is being run jointly tonight with Nanette and also with Ballista Real Estate and also Harry Jessel. So with my background of over 32, 33 years in banking, I've had a lot to do with the regulators, APRA and RBA in particular. And I've been in a lot of industry forums through that period as well. So I hopefully should be able to give you some good insights into where I think the property market is going in Sydney and what type of properties you should be looking for, what is happening with the economy, where is that heading over the next 6, 12, 18 months, where is interest rates heading and so on. So we will kick off straight off with with what's happened in the last 12 months. I definitely won't dwell on things that you already know, okay? So you all know that the property market has gone up significantly in the last 12 months. So these figures are up to 31 January. Sydney, 25.5% growth. Brisbane being the stellar performer, 29.2. Adelaide, 24.8. Canberra's been very strong. And the regional areas, everybody's now suddenly after post-COVID talking about regional areas. They have been very strong as well. For the month of January, very strong performance in Brisbane, 2.3% in 1 month, which is massive. Adelaide is pretty strong. Regionals are still performing strongly. Sydney has bucked the trend for the last 3 months and actually gone up to 0.6% growth. I will make it very clear to all my listeners today that Sydney is not a single property market. So there's two key things I'm going to say today. One is every suburb performs differently. Even within a suburb, it can perform differently. Different type of dwellings have performed differently. And you'll see a graph in a minute regarding what I'm talking about regarding different types of properties. But this type of event where you see a 25 or a 29% growth in 1 year has only happened 3 times in the last 100 years. Okay, only 2 other times have we seen this type of growth. In 1989, it was 29%. And in 1950, we won't go through 1950, the different reasons for that, 111%. But this does not happen like once every 5 years or 10 years or 15 years, okay? So keep that on the back of your mind when we go through the rest of the slides today. Okay, as I said before, if you look at the Sydney prices, house prices have gone up. So the left of the graph there, the tall one is house prices. They have gone up significantly higher than apartment prices. Okay, and this again is the median price. And so this, in some suburbs, I know that apartment prices have only gone up probably around 5%, not even this high. So this is the whole of Sydney, and this is the whole of Sydney. Now, same as the house prices, right? So house prices in some suburbs have not just gone up about 34%. It has probably gone up 40, 50, even 60% in some suburbs. So keep that backdrop on the back of your minds as we go through the discussion today. Now, as I said, we've sort of bucked the trend a little bit in terms of this Sydney prices. This is Sydney prices. So we had a very, very, very strong March 21. That was our strongest month for a very, very long time. In 1 month, 3.7% growth. It has somewhat coming to a downward trend. So the rate of growth, we're still growing. Rate of growth has slowed significantly. So we came down to 0.3%. So this trend, everyone's talking about this trend. And then in January, I just showed you a number, it's 0.6%. Okay, so January has slightly gone up again. So we'll go through what causes. So what makes the prices actually tick? What are the key factors? These are my 7 top factors of what makes price move in the property market. First one, there is supply and demand. Supply and demand, absolutely every single time for any commodity, not just property, is the number one thing. If you don't have demand, you are not going to see property any type of price increase. Now, so it's economics 101, guys. I mean, you have seen with any other commodity. We have seen it recently with secondhand cars. When new cars sort of slowed down, the demand for secondhand cars actually went through the roof, and people were paying very high prices for secondhand cars through COVID because of lack of supply of new cars. So supply and demand, very, very important. And we have seen throughout the last 12 to 15 months, significant demand being created, okay? And the supply has been low. The supply recently there's been more listings in the housing market in the last 3 months because of a number of reasons. People are trying to sell off and move interstate or move to the country. But also people don't want to miss out on this record prices in the fear that they might miss out on this because the media started talking about the slowdown in the property market. So there's a bit more supply. So keep supply and demand on the back of your minds. The next thing is interest rates. One of the big reasons why demand shot through the roof is because interest rates went down so low. Sub 2% interest rates are still there in the market, fixed rates and variable rates for owner-occupied properties. I saw this morning rates of 1.89 are still there in the market. That, compared to where we were pre-COVID, has been a significant fall in interest rates, and that has created significant demand because those people who are actually living in apartments on rent or owned an apartment suddenly found that they could actually afford a house because of their affordability, okay? So where you could borrow as a couple, perhaps 800,000 or 900,000, the bank says you can borrow 1.4, 1.5 million now. So that has caused significant demand in one sector of the market, which has been houses, okay? Now, affordability is a very important part of anything to do with demand. So with interest rates came affordability. And so there's a lot of talk. The biggest talk at the moment is one of the biggest talks at the moment in terms of our properties and our economy is what is going to happen to interest rates. Well, I have been saying for the last 6 months that holding these seminars and webinars, that interest rates are going to go up in the second half of 2022, and we will probably see 2 spikes of interest rate 0.25% at a time. Okay, I still live by that. A lot of people have come out recently to say the same sort of things. And the Reserve Bank, for the first time after the first Tuesday of the month when they had their meeting, the first time the Reserve Bank governor has said that it is probable that interest rates could go up this year. Okay, that's as far as the actual wording goes in the minutes of the RBA. However, these 2 things are the key factors that have an impact on interest rates. And we should all know a little bit about this. Firstly, inflation. Inflation is now running at around 3%. Inflation, RBA wants to see inflation between 2 and 3. Well, it was well below 2 throughout COVID, well below for the last 2.5 years. And now it's gone to 3. In the US, the inflation rate has gone to 7%. In UK, the inflation rate has gone to 5%. So listen, we are not immune to what happens overseas. And we've got to watch very carefully that this is one of the headwinds as inflation goes up. What are the key things in this inflation factor that causes inflation to go up in the calculation? One, you've got rents, and we'll talk more about rents shortly. Rents are going through the roof. I've been saying it for 6 months now, and now it is all happening. You see oil prices. If you're filling your petrol at the Bowser, you know that prices have gone up. You buy fruit and vegetables, you know the prices have gone up. These are factors that impact on inflation, okay? Wages growth also very important. Wages growth is not an issue at the moment in our economy, but you will find that there will be wage pressures. Unemployment has now gone down significantly, and we'll talk more about that in a second. And that'll cause some wages growth pressures. With wages growth pressures, we will likely want to see, the Reserve Bank will likely want to see wages growth at about 3% and higher. If it goes to 3% and higher for a sustained period, that is when the interest rates are going to be moved up. Okay, inflation is not going to be enough. Wages growth is very, very important. Both of them together go up. The Reserve Bank will have no other option but to increase interest rates. So that's a headwind. We've got to keep that in mind. 0.5% interest rate increase is not going to move the needle on property market all that much. Okay, keep that in mind, because the big factor still is demand, and we'll talk more about demand. APRA regulation, you've seen APRA actually tighten up a little bit in the ability to pay calculations. They use a 3% buffer now instead of a 2.5% buffer. So what that means is that you are able to borrow slightly less than what you were able to borrow, say, 6 months ago. So that is something that they have done to actually take the heat out of the market. There was too much heat developing in the market, particularly in the higher end of the market, where property prices had gone up from $3 million to $4.5 million. A massive increase, okay? In places like Warunga, Gordon, Kilara, North Shore, and also in places like Strathfield, where you go and see, and people who live in Strathfield, and I talk to a lot of doctors there all the time, and they tell me that they can't believe what has happened in the suburb in the last 12 months. You can't buy land in Strathfield now for $3 million. So it has gone absolutely crazy. That heat needs to be taken off, and that's what APRA is doing. They're taking some of that heat off the market. That translates into the bank's lending policy. And the other factor I should mention is the appetite, okay? The appetite for banks. One is banks' lending policy, and what is the appetite for lending? Well, I don't know how many of you saw the Commonwealth Bank's profits for the half year that got announced this morning, and they've upped their dividends, has gone up significantly, okay? Gone up double digits. So banks are in a very healthy position. And what drives a bank's profitability in Australia more than anything else is the residential mortgages, okay? Half of a bank's balance sheet in Australia is residential mortgages. They have enormous appetite to lend in the residential mortgage space. It's bread and butter for them, okay? The banks are also flushed with money at the moment to be able to lend to this asset class. The reason why I say that is because there's more than $400 billion of savings that Australians have made that have actually caused banks' deposits to go up. So when you go and deposit money in the bank, you don't get a lot of money, do you? You'll be lucky if you get 0.5% today. If you fix it, you'll be lucky if you get 1% or slightly higher. So there's a lot of money to be made for banks in this space. So they've got a lot of appetite to lend. This is important because if banks stop lending in this space, guess what? Prices are going to move significantly, okay? Very important that we have a healthy regulator, and very important that banks have appetite to lend in this class. Economy. Two key numbers in the economy that impacts on property prices, and the very reason why all the economists came out in middle of 2020 and said prices are going to fall 20, 25, 30% is because they thought the GDP, our economic growth, will be at negative. We'll have a recession for a prolonged period because of COVID. Secondly, they thought unemployment is going to go to 12% and stay high for a long, sustained period. Well, neither of those two things happened. Yes, we had a very short-lived recession, 2 quarters of negative growth. 1 quarter was only 0.6 negative, and it bounced back very, very quickly. Unemployment, I am surprised unemployment is at 4.2, okay? It has come down well below pre-COVID levels, 4.2, and all the economists are now predicting that it's going to, there were 3 in front of the number in the next few months. So listen, we have a very tight job market. That's why wages growth, we need to watch closely. And GDP, mark my word, GDP is our economy is gonna grow significantly. I don't know if any of you saw the sales numbers come out 2 days ago. The sales numbers for the December quarter for Australia-wide was 8.2%. That is massive. That is the strongest quarterly rise on record. I always said in the last 3 months, those of you that heard me in these webinars, that GDP is going to grow. People are going to spend money. You can't find parking at the shopping centers. Well, that's exactly what happened. 8.2% for Australia. Guess what? Out of that, the highest growth in sales in the December quarter was New South Wales, 15.3%. Okay? Queensland was only 3%. So we carried the biggest load of the sales. So people in New South Wales, people in Sydney are cashed up, they're spending money, and that is going to see our GDP grow. You need spending to see GDP growth. Don't be surprised if a 3 or 4% GDP growth in 1 quarter coming up, okay? The next one, very quickly, government spending, infrastructure incentives is extremely important, okay, when it comes to property. We all know about job seeker, job keeper, and all the incentives that the government provided as home builder grants and so on. All of those things kept our unemployment checked and kept our GDP, our economy growing. And that's why we did not have the sustained level of downturn that the government expected, that the Reserve Bank expected. So these things are very important. And then the 6th one there, very, very quickly, banks, do they have write-offs and delinquencies with housing loans? No, they don't, okay? No, they don't. I have been in banking and I've been in risk committees and executive committees for many, many years. And I can tell you that banks do not lose money in terms of write-offs with residential mortgages. They do not. You do not see mortgage in possession sales. Most of you who've only been in Australia probably for 10 or 15 years, you would have never seen mortgage in possession sales. I have seen them roughly 38, 39 years ago when we did have a recession. There was a lot of mortgage in possession sales. What I mean by mortgage in possession sales, for those of you who are not familiar with it, you don't pay your mortgage 1 month, 2 months, 3 months. You go on to what they call a worry list. They possess your property. They give you notices. Then they auction your property, and they take their loan amount and they give you the rest, okay? That is not happening and is not going to happen. Global factors I won't talk too much about, that's why it's number 7, but they do have some sort of secondary knock-on impact on our economy. Okay, the biggest news I'm gonna tell you today, and these numbers are from the New South Wales Treasury, okay? My talk is mostly Sydney-centric, but listen, the biggest thing to keep in your mind is that we're going to be a city with 6 million people by 2036 and 8 million people by 2054. This is just Sydney, okay? This is massive population growth. To cater for this type of population growth, you need almost 40,000 dwellings per year. These are not my figures. These are New South Wales Treasury numbers. I'll say that again. So what we are seeing at the moment in our city, and what is a major transformation, okay? There's 50 billion of new transport projects over the next 10 years. This is just transport projects. And this kind of change in our city only happens twice in 100 years. This is once in a 50-year event you're all witnessing in our city. We have got hospitals getting upgraded, new hospitals getting built, schools getting upgraded, new schools getting built. There is roads and tunnels, a new airport being built, a new Atropolis being built, a technology center, research center. libraries, I mean, you name it, museums, every single thing that I'm saying, there's all of this is happening to our city. This is transformational change happening to our city, because to cater for this type of population growth, you will need to rezone, you need to build more apartments, you need to have higher density approvals. All of those things need to happen to our city, and that's what you are witnessing, okay? Now, of course, these numbers were done a few years ago, and we have seen a slowdown, obviously, in our migration, and a lot of students have gone back, and new students have not come here. So we have not seen the type of population growth that required 40,000 dwellings, particularly in the last 18 months. So there is a backlog. All I'll say is there has been a backlog, and that backlog has mostly created high vacancy rates in apartments, okay? Now, before I talk about apartments and houses and some of my predictions, I'm going to talk about the predictions of the big four banks, okay? Because as soon as the Reserve Bank governor's possible interest rate increase this year got read in the minutes a few days ago, NAB came out very quickly and started predicting for 2023 there is going to be a massive fall in house prices, okay? So listen, I'm sharing this slide for what it's worth. ANZ are saying in 2022, we're going to see, this is again, all dwellings, okay? They're predicting 6%. 2023, -4. CBA +6, -12. NAB +4, they haven't done a minus yet. Well, the minus figure they have actually just come out with, which I haven't updated in this chart. Westpac 6% and -6. So Westpac are pretty neutral for the 2 years. Now, I will note to all my listeners that last time we saw major predictions made by these four banks was in the middle of 2020, and they were all in the 15% to 25% minus for 2021. Okay, I mentioned that because you've got to read this prediction with that on the back of your mind. The CEO of CBA said 25% down in 2021. I did not believe any of those numbers, and I was compelled to actually write an article in the Indian newspaper, Indu's Age. You can go and look at it in the July 2020 e-paper, will still be there, or I can send a copy to you if you're interested. And my prediction was a 20% increase in 2021, and that article was written on 31st of July 2020. I make that point because banks are not held liable for making these type of predictions. So they said, CBA said 25% down, and in fact, it was 25% up in 2021. That's a 50% turnaround, okay? So I'm putting these figures up for you because it is out there in the public domain, but I wouldn't read too much into it. SQM Research, they have a lot more assumptions for each type of range that they have put. For example, where is inflation going to be? Is APRA going to take further action? Scenario 1. Scenario 2, scenario 3. I won't go through all of this. Scenario 4. So based on 4 different scenarios, they have got a range of this will happen in 2022, -3 to +3, +3 to +8. That is their best prediction. And that is based on cash rate remains unchanged, which means no interest rate increase. Headline inflation 3 to 5%, no further APRA action. QE scale back, okay? And the worst figures are here, -7 to -2, which means inflation is up, interest rates have gone up 0.5%, and so on. Okay, I won't go through, as I said, I won't go through this in any detail, but I just want to put it out there so you are all aware of SQM Research is a big research house. I do read a lot of what SQM says. I don't believe everything they say, and that's why I make up my own mind. So I've been bold enough tonight to actually make my own projections for the Sydney property price growth. And I am split that with houses and apartments separately. Okay, that's my big story for you for the day. 2022, so I've got 5% for houses going up and 14% for apartments. Yes, you read that right. 14% for apartments in 2022. In 2023, I'm only going 1.5% for houses. Already we are seeing some slowdown in the house area, and I think it will really slow down. It will have the biggest impact with the increase in interest rates. The area where it'll impact the most is actually houses, and I'm only going for 1.5% increase. And apartments will continue to have momentum from this year into next year of another 6%. So in total for the 2 years, I've got 6.5% for houses and 20% for apartments. And this is why I say this, okay? The property market next 6 to 24 months is the perfect storm for apartments, okay? I've already said to you that apartments did not go up much. Apartments are due to go up. The gap that has been created between apartments and between houses is more significant than ever. And I'll show you a couple of graphs in a minute. Okay, the big thing is the low rates will continue, okay? And there's a high appetite, I've said, for banks to lend. These, on the backdrop of those two things, so nothing really changes. These rates, 0.5% is not going to move the needle for apartments. I'm telling you, it's not going to move the needle at all for apartments. Demand and the Reserve Bank will be very, very, very slow in increasing interest rates. They will lag behind other Northern Hemisphere countries, and they will do it really, really slowly, okay? They will do a little bit and watch for 6 months. It's not going to be sharp. Demand is not going to change. In fact, it's going to increase. The border is opening again, 21st of February. So thousands and thousands of people are going to continue to come here. Migration, returning expatriates and students. We cannot underestimate the tens of thousands of people. There are over 500,000 expatriates overseas, okay? 25% of them are looking at coming back. These are research that has been done by large real estate companies like Knight Frank. Investors, and I'll talk a bit more about rent in a minute, but rents are gonna go through the roof. I have been saying it for the last 6 months. Not many people have been listening, but what you are finding is in the last 5 days, I have received so many articles that people are sending me that they're reading what I have been saying for the last 5 or 6 months. And it is all heading north, okay? So what will that do to, and the biggest benefactors of that are people who own apartments. People who own apartments are going to see their returns going up. With interest rates still staying low, you're going to see a spike in rents of at least 10 to 15% this year, at least 10 to 15%. What's that going to do to your returns? They're going to look absolutely amazing. In some places, it's already cheaper to buy than rent, or at least on par, okay? And a lot of foreigners or non-residents are actually applying for approvals to buy here. Supply will continue to become lower than demand. It takes 3 years to actually do an apartment project. By the time you get your DA approved, it's 1 year. It takes 2 years to build. So you can't suddenly, we always lag in this sense, okay? So if people are thinking we've got an oversupply of apartments in Parramatta, in Zetland, in Kellyville, and in a couple of other suburbs in Sydney, that will get absorbed in a very short space of time. I give it 3 to 6 months. By June, there will be no oversupply in any suburb. And you will look back and say, well, I should have bought at that time. Cost of construction. We're not focusing much on this cost of construction, but I can tell you, and I talk a lot to developers every single week, the cost of construction has gone up 20% and it's going higher. So just watch this space because this is very, very important. If an apartment was going to cost a developer $250,000 to build, guess what? If the cost goes up 20%, what will they raise? They'll raise the price, okay? If you can buy an apartment now at today's price, you're locked in. They can't increase the price. If you buy a block of land and you're not going to build for another 6 or 12 months, guess what? The cost of construction is going to go up further. So keep that on the back of your mind. New South Wales government, very important for us to know that we have a very strong balance sheet, a very well-run government, low unemployment in our state, lower than the 4.2, and we have, as I said, huge infrastructure spend. I'll make this point to you. In the next 5 years, Sydney or New South Wales has more infrastructure projects than the rest of Australia added together. I'll say that one more time. There is more infrastructure projects in Sydney, whether it is airports, roads, tunnels, hospitals, schools, etc., than the rest of Australia added together. There is no better place to invest. We have huge population growth, huge infrastructure spend, very strong government, and very strong economy. Okay. And last but not least, consumer confidence and business confidence is extremely important with anything we do. When we spend money, you got to have confidence. Of course, this was way down when in June, July of 2020, this was way down. And that was because people did not know whether they're going to live or whether they'll be able to put food on the table. They were worried about their jobs. They were worried about their lives. It was survival. So these two things actually went down a lot. But now it's way back up again. And that's important because we spend our behavior, human nature is we spend money when we feel good about it. When we know that we have got enough money to go and buy another TV or another car or another investment property, okay, that we do with confidence. And right now, people have not lost their jobs post-COVID. People have got good savings. And people are cashed up to go and spend. So why buy an apartment now? Why am I saying buy an apartment now? I talked about the huge gap that has developed between house and unit prices. I won't go through that again. This gap will start to close from now to the end of 2022. So where you have seen some suburbs where prices of apartments have gone up, let me use an area like Ponds. Some of you may be living near Ponds. The house prices have gone up a good 30, 40, even 50%, you could say, okay? Land prices have gone up in near Tallawong, about 60 to 70% land prices have gone up. We were selling 300 square meter blocks of land there for 550,000 about 15 months ago. Now they are 900,000. You do your sums. That's not 20% growth. That is more like 70% growth. So this gap is going to start to close. Okay, you can't have this type of gap. I've lived in Sydney for 40 years, 40, and I have not seen this type of gap develop in between the house prices and apartment prices. This gap, you can write it down now, is going to close because of these three big reasons. Okay, a lot of population won't be able to afford homes anymore. Already in Box Hill, you buy a block of land, $3,000 a square meter. Do you think people are going to pay $3,500 a square meter soon? Absolutely not. Our buyers are telling us that is a premium. That is already too high. I don't want to pay that much. We are getting that for the first time now. Things are going to slow down in that part of the market. Okay. So demand for units will outstrip supply. Mark my word, the demand for units are going to go through the roof and we are not going to have enough. And rental is another thing I'll talk about in a minute. Now, gearing with price arbitrage, sorry to use a banking term here or financial markets term, but what I mean by this is to accumulate wealth in property, you don't have to go and spend $600 or $650 or $700,000 right now. You can pay 10% deposit and take the advantage of the gap closing in with the house prices and watch in the next, say your apartment you buy now settles in 12 months or 18 months or 24 months. You will watch that price grow over that period. I can assure you that prices are only going to go up in the apartment space. So by paying, say, $60,000 or $70,000 deposit now, and you pay the rest of the money when you get your keys to the apartment, you are actually going to take advantage of this price arbitrage, and you are gearing with only 10%. Okay, so This is how you get ahead in the property market. If you don't get into some of you are listening and you're not in the property market now, then please go and do something to find 10%. If your parents or anybody else you know is able to give you some equity to go and get into the property market, do it. Please do it, because this type of opportunities do not come every day. Okay, absolutely important. If some of you have equity in your house and not using it, it's wasted money. You got to use the equity in your house to do this. Okay. Now the media is starting to talk about house and unit price gap reaches record levels. Sydney's gap was the nation's widest, with houses 523,000 more expensive than apartments. This is December 21. The Sydney property clock for apartments. So what I'm saying is this is the start of the recovery for the apartments, and you're going to see during this year, between now and end of this year, approaching peak of market by the end of this year. Okay, this is the year for apartments. Financial Review is finally talking about it. September 8th, my apologies. Apartment prices set to bounce as house prices become expensive. Domain, Sydney apartment prices gaining momentum as affordability bites. Apartment prices beginning to turn around. So all of these are coming in the last 3 months. People are starting to talk about it. And I'll talk now very quickly about rent prices. So rents soar at fastest rates since 2000 as housing shortage squeeze, okay? This is 27th of January. Now, you've seen the rentals here, the average rentals here, and the houses always are more, but the number of houses for rent are only 20% of the market. So 80% is actually apartments. Most of what you rent is actually apartments. So this will take off and it's going to increase. So you will find that apartments, you'll start getting very close to the 600 mark by the end of this year. If you are renting a property and you want to continue to stay in that rental property for the next 12 months, please negotiate now with your vendor or your agent. Increase your duration of your rental now, because if you wait for 3 or 6 months, you'll regret it. It's going to go up. Vacancy rates. So Sydney's vacancy rate is at 2.6. Brisbane's vacancy rate is at 1.3. We peaked at around 4. We're down to 2.6. Now, I saw this just again recently. Sydney vacancy rates fell to the lowest level since March 2018 to 1.9%, even lower than pre-COVID levels. So we are already now at 1.9. I haven't updated this graph. And I have been saying now for 6 months in these talks, using the same graph, saying to everyone that by June this year, you will see this graph come down to 1%. Now, I did not expect this big fall to happen so quickly, but it is happening and the border is opening again. So listen, rentals are going to be very, very tight. Rent is going to go through the roof. Brisbane has experienced this already, going to 1.3 and going lower because they have had a lot of migration happen from interstate, mostly Victoria and then New South Wales. Okay, so keep that in mind. Very simple graph here to illustrate what is going to happen in the predictions and why I'm so bullish about it. We're going to see strong economic growth. We have already seen jobs growth. We are soon going to see wages growth. Population growth is lagging and it's going to take off through this year. That means increased rental and buyer demand that translates into increased property values. Everybody can understand this graph. Very simple. So what should you buy and where should you buy? Rule number 1, location. Don't let anyone tell you it's just location, 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 and close your eyes and buy. It's not that, okay? Location is important. What's important with location is infrastructure. You got to have roads, metro, hospital, schools, all these things. As many boxes as you can tick, the better. You got to have investments in the local area to create jobs. Okay, the more investments that come into your local area, the better. You got to have population growth. You got to have supply, demand, demographics. You've got to see these figures are all available. New South Wales Treasury publishes the census numbers and their projections. You can go to any suburb and see what these type of things are all available on the net. And you can see what type of people are going to move there. what's housing supply is required, etc., etc. Number two, also very, very important, is the price. You don't blindly buy anywhere a property. I have seen people lose money in property and are still waiting to see price growth above what they purchased it for. I always use the example of places like Rhodes and Wentworth Point, where people paid off the plan about 5 years ago, and they settled about 2 years ago, and they're still waiting for price growth. Now, this is because they buy off the plan something for $950 for a 2-bedroom apartment, and they're wondering why the current valuation after all this is still $950. Well, because they paid too much for the property. You need to make sure you buy at the right price. If you don't buy a property at the right price, you are wasting your time, okay? And that's where we come in. Timing is very important. And right now, the timing for buying an apartment and locking something away is absolutely perfect if you have a 1 year to 2 year view. Absolutely essential, okay? But we've got to pick the right location. Developer and builder is becoming more important in the last 2 or 3 years because we have seen a lot of high-rise apartments in Sydney which have been inhabitable because of structural issues. There are at least 6 buildings I know of which have issues, okay? The latest ones being in Parramatta and one in Castle Hill. So we need to take into account location, price, timing, as I said, is perfect, and who the builder developer is. Now, some of the things I talk about with infrastructure and location are things like this. Hospital. Rouse Hill Hospital is being built. There is no hospital in that part of northwest of Sydney. So this has to be a big infrastructure, and it's going to attract more people to the area. The metro you all know about. What you've seen with the metro right now is not even 1/3 of the development that is about to happen with metros in our city, okay? Marsden Park is a good example of an area where there has been substantial investments. Remember, I talked about investments. Where are investments coming in? IKEA went and invested there. Bunnings has invested there. Costco has invested there. Why do these large companies invest there? They do a lot more research than I can ever do. And if you piggyback on where they go with their investment, you will never go wrong. So that is one easy way to do your research, is see where these big companies are spending their money. But there is going to be a lot of jobs created there. And we all know what has happened to the price growth in places like Marsden Park over the last 18 months. Riverstone Town Centre is coming up. It's going to be as big as the Rouse Hill Shopping Centre. So when this comes up, guess what will happen to the prices in Riverstone? It's going to become probably more expensive than Rouse Hill. So all of these factors are important to know, not just what's happening today, but what's coming in the future, okay? Very quickly about our economy in Sydney and New South Wales. Our GDP is bigger than countries like Malaysia, Singapore, Hong Kong. The Greater Western Sydney, which includes the west part of Sydney as well as the northwest part of Sydney, is the 3rd largest economy in all of Australia. Like I said, with everything happening in our city, you don't have to look anywhere else to invest because prices will keep moving up in our state. Northwest Precinct will be bigger than Canberra in 8 years. I mentioned Badgerys Creek Airport. That's coming up. That's going to create a lot of stimulus in the west. Western Sydney, Astropolis. If you don't know about the Aerotropolis, please Google it, because 19 companies, tech companies, the big tech companies, the big research companies, your Yahoos and Googles and so on, they have all signed up to go and set up the head office at the Sydney Metropolis. And I'll let you read those yourself. So there is going to be a huge population growth, which is already happening in these areas. And it is important wherever you invest to know that there is going to be huge economic growth, huge economic activity, huge population growth. With those things in mind, you know you're not going to make a mistake with property purchases. I was just the same way as I was compelled to actually write an article in Indu's Age in July of 2020, I should say. I was compelled to actually write an article in December 21 as well. Again, the e-paper is available if you want to go and read it. But my key recommendations to you right now and what I wrote in this article is you pick a suburb where there is significant infrastructure spend and population growth. Number one. Number two, pick a suburb where there is significant house and apartment price differential, where the gap is the largest. Number three, focus your search in the lower price ranges. Okay, in the article, I say 550 to 750, but here I've said 550 to 600 for 2 bedrooms. If you can, but if you're choosy with your suburb, go to 750, but find something which is in that affordable range. Okay, and you got to go with a reputed developer and builder. I will stop there in terms of my predictions, in terms of the insights with what you should buy and potentially where you should buy. And now I will pass briefly onto Krish to showcase a couple of projects. Now, just before I pass on to Krish, I'll just mention that we have probably over 35 projects in Sydney at the moment. And we are only showcasing 2 projects here, okay? Out of our top 5, we would rate these 2 as our top 2, and there are good reasons for it. So we don't show the other 25 because we necessarily would not buy there ourselves, and we don't want our listeners to actually purchase something that we wouldn't put our money into, okay? Now, I'll pass on to Krish now. Thanks, Krish.
Good evening. No problem, Sachin. Thank you. Good evening, everybody, and thank you so much for joining us tonight. My name's Chris from the Nivas sales team. Now, as Sachin mentioned, we have a plethora of projects on offer, but we have chosen these 2 projects in particular, which we're going to be discussing tonight. And the reasons being based on everything Sachin has said in terms of being a good developer, good location, ticking all of the boxes, and exceptional value as well. So the first project we're looking at is Evoke in Blacktown. Now, as you can see, it's a beautiful facade. So it's a nice looking building. It's about a literally 5 to 7 minute walk to West Point Shopping Centre, a 5 to 7 minute walk to the train station. It's within 10 minutes walk of the new university. In terms of the developer, you've got Jasara. Now, Jasara are one of the most experienced developers in New South Wales. They've had more than 25 years experience. They have built projects for the New South Wales government. They have built obviously a lot of apartments in the past before. They've built high rise, low rise. Their depth of experience is honestly second to none. And just a little bit in addition to that. So when we take on any project, we do a lot of due diligence on the developer. So we check fair trading for complaints, building association. We do a lot of different checks on reviews. We do strata reports on previous buildings they've built. We ensure they've had the same business name for at least 10 years. And these are all criteria that Sachin has put together that we live by. And the reason for that is because we only want to deal with reputed developers. But I digress. We'll move on to the next slide. Hello?
Oh, sorry.
Yep. Oh, thank you. Sorry. Okay. So this is just a few of the previous projects that Jasara have done. One in particular is the Wave on Princess Highway, which is quite an iconic building. The Villa Del Mar in Rouse Hill on the bottom left-hand side as well. So these are projects you might have driven past, and all the buildings are very unique. They're very nicely architecturally designed. So yes, very well finished and very well designed apartments as well. Now, Evoke, as I mentioned, the location is right behind you. You can see West Point Shopping Centre. You've got the bus interchange and train station, again, within walking distance. So guys, the location here honestly does not get any better. It's walking distance to everything. One of the biggest sort of tenants who are renting around this sort of area of Blacktown are people working in the hospital, for the simple reason it's walking distance to everything. So you're getting a good demographic living in the area. It's shifted a lot since when I was young. And yeah, it's growing into more and more of a white collar suburb, which is quite nice. Now, if we move across to the next section, there's a lot of big changes happening in Blacktown. So obviously there's a lot of infrastructure being spent. The hospital's recently there's been an upgrade there. There's been some, obviously there's been excuse me, there's been a lot of infrastructure being spent in Blacktown. You've basically within 35 minutes in the express train taking you to the city. So yeah, it's a very, very good location, very good spot to live. And the university, Australian Catholic University, is only a 10-minute walk as well. So yes, in terms of location, it is fantastic. Now, in terms of the interiors, guys, you've got, as you can see here, there are 2.7-meter ceilings. You've got floorboards, ducted air conditioning throughout. You've got Miele appliances. So it's a very, very well finished project. This type of caliber of projects you'd normally see in the eastern suburbs or the North Shore in the past, but this is where they're bringing it to Western Sydney now, which is amazing. So very, very well finished there. In terms of the bedrooms, that's just a quick snapshot. You've got plush pole carpets, very well finished. And again, we can go and actually visit the display. They have a completed 1-bedroom apartment we can see. Very nice bathrooms as well, guys. So this sort of reminds me of a 6-star hotel when you walk in there. You got the floor to ceiling tiles. It's really, really nicely done. Again, a testament to how good the developer is. Then if we move across, so in the building, guys, there's no facilities like pools and gyms and saunas and that sort of stuff. So you've only got the rooftop, which we just saw just there. So there's a rooftop area. And what that does, it keeps your strata cost nice and low as well. So as we move across to the next slide, basically, this is the project in a nutshell. So construction will be commencing within the next 4 to 6 weeks. Actually, I believe they already have kicked off. Construction completion will be towards the end of next year. Now there's 100 apartments in stage 1. Stage 1 is just about to finish. There are some 1-bedrooms there. And guys, the 1-bedrooms there are starting from 436,000. That's for a 1-bed, 1-bath, 1-car. So in terms of your rental yields, that stacks up very well for any investors looking into something like this. Obviously, as Sachin mentioned, rents are creeping up as well. So that's going to have quite a positive effect. Then in stage 2, we're actually taking expressions of interest at the moment. And we have a selection of 1, 2, and 3-bedroom apartments. Now, 3-bedroom apartments in Blacktown, guys, are selling extremely fast. As Sachin mentioned, there's a big gap between houses and apartments. So not all first home buyers can walk into a $1 million property in Blacktown. So they are gravitating towards those bigger 3-bedders. So we will have exclusive access to these 1, 2, and 3 bedrooms. At the moment, we are taking expressions of interest. If you are interested in going out to the display and walking through that process, let us know. These are going to be massive apartments too, guys. So your average internal is about 82 square meters. So they're big. They're very nice layouts as well. And as I mentioned, the finishes are exceptional. So, and there's a few other incentives for Nivas as well, which I'll get into when we meet at the display. So the next project I want to mention, guys. Now, this project is the fastest selling project in the whole of Western Sydney at the moment. Okay. So stage 1. So what you see in front of you, that little dome that's sort of closest to you there, that's actually Tullawong Station, right? So stage 1 is directly in front. So where you see that triangular building in the middle, that's stage 1. So those sort of 1, 2, 3, 4, 5 buildings. That entire section, ladies and gentlemen, has sold in 9.5 weeks, the entire thing, right? This was mostly done during Zoom when we were in lockdowns. So this project, guys, and there's a very, very good reason for that. Now, what you see in stage 1, the ground floor there is going to have shops. So you're going to have about 40 specialty shops. I believe IGA are looking at being the anchor tenant there as well. So you've got shops underneath with just downstairs from your apartment. You've got the Tullawong Station directly across the road from you. You've got, so this is just a snapshot of the shops. So you've got everything there. You're literally 50 meters to the metro. You've got your beautiful shopping center underneath you as well. And one thing that I will mention, which is one of the reasons why this is sold so fast, so 330 apartments gone in almost 10 weeks. The reason for that is because this is built by the 3rd largest developer builder in Australia. This is Daycorp. So Daycorp have a reputation that is second to none. And the reason why I'm saying that, all of this land that was owned here before all these apartments are coming up, this was all owned by Landcom. Now, Landcom are the New South Wales government body that own basically land in New South Wales. So given that this area was marked as a growth precinct, the New South Wales government and Landcom basically said, we have to choose a builder to build all of these apartments. Who are we going to choose? Long story short, Daycorp won the tender. The New South Wales government actually have now created a rating system as well. That rating system ranks developers from 1 to 5. Daycorp have been at the number 1 since that rating system has recently been implemented. So they are second to none, guys. So that's another reason it gave a lot of buyers confidence that they're buying from the best. And there's a few other reasons which I'll get into as to why they're so good. So
can I add one thing? So in the back here, what you see is actually ponds.
Yes.
And ponds is one area where I mentioned that prices have gone up significantly in the last 12 to 15 months. So you've seen ponds has seen growth of 40 to 50% in house prices, whereas apartments in this area, and Tallawong Road that I talked about, where we're selling land for 550, that is now 900, is just around here on the side here.
Yeah.
So in that same period, apartments have not gone up much at all in this area. And I will also say that with the price points that we are talking about in here, where you're right next to the metro, you got shopping underneath each of these 5 buildings with high quality finishes. Those prices are very, very reasonable. So we will talk more about prices in a minute, but I will just give you a backdrop that where there is a metro in this northwest area, whether it is Kellyville, Castle Hill, Rouse Hill, or Norwest, all of those suburbs, you will find that the prices are significantly higher than here, but the prices will catch up here. In Norwest, if your 2-bedroom start from above 900 and above, and the same in Castle Hill. So you will see the growth here. Thanks, Chris. Sorry.
Not a worry at all. Now, thanks for that, Sachin. Now, guys, in terms of finishing in this project, now why I say Daycorp are the best. So you've got 40mm bench tops. The flooring that you see there, guys, is engineered timber, right? Now, the next level up from that is hardwood. So you can't put hardwood in apartments because it's too thick. This is the best grade of timber that you can get in any apartment. Can be sanded down 3 times in its lifetime. This sort of stuff you don't get in a lot of apartments, especially in the West and Northwest. These bathrooms, guys, now this is called a pod style bathroom, okay? Now, I know many people don't get excited about bathrooms, but I have. And the reason being is that this particular bathroom is prefabricated and built in a factory in Melbourne, brought over to Rouse Hill, and basically plugged into these apartments. Now, what that does is it ensures that all of their pressure testing, their water, any leaks, any waterproofing issues are all addressed before it's even hit the apartment, right? It creates consistency. And the other thing is it's 30% more expensive than if you're doing it in the traditional method by getting tradies to come in and build your bathrooms. So again, something which is just unheard of in the Northwest is something that they're offering in Tallawong. Now, location, guys, is absolutely fantastic. As I mentioned, you've got the shops underneath you. You are literally 1 metro stop away from the Rouse Hill main town centre. You're a stone's throw away from the new hospital coming up, which will obviously, and one thing I forgot to mention, so in the actual project, in level 2 of all of stage 1 are going to have specialist officers, okay? So these are ENT surgeons, these are pathologists, these are all these kind of people who are basically going to be working, not in the hospital, but working near the hospital. And that's what's earmarked for this project. So what that does, guys, you're going to get more of your nurses, you're going to get more of your white collar demographic coming in here, leasing the property, people who don't have cars, who need to just be walking distance to everything. So you're going to be attracting a very good demographic. And as it is, most of Rouse Hill is white collar and quite a affluent demographic anyway. So as I mentioned, guys, Tallawong Station, one of the key things with this project as well, guys, Tallawong Metro is the first station on the metro line if you're going to be heading towards the north, right? So North Sydney and all that sort of stuff. Now, that line is going to be extended in 2024, okay? And that line is going to take you to Barangaroo and the city and that direction, right? Now, you think about it. This project finishes in 2023, right? At the end of 2023. 2024, you're going to get direct city access with a metro, the first metro on the line to take you there. So you're always going to get a seat, which is a big plus as well. But when that happens, I mean, you look at Kelly, you look at all these places where connectivity started to happen in those areas and they went through the roof. So it's a very, very compelling story with this.
Can I just mention one thing? So stage 2, so this was stage 1 here.
Yes.
So just to all our listeners tonight, so the stage 2 is this section here, and that is being launched this weekend. These 3 buildings, which are closest to Schofields Road, these 3 buildings are being released first, and they are very, very well priced, starting from around 670,000. So these 3 buildings are going to be released first, so everybody is aware. And that's happening this Saturday. That we are taking expressions of interest on those 3 buildings now.
Yep, correct. So yeah, guys. So look, we can take you out there on Saturday.
And the completion for this stage 2 is actually into 2024, about mid to late 2024. Yeah. So there's plenty. There's a long wait for it, which gives you a bigger time to see price growth over a longer period of time as well.
Correct. So guys, in terms of the projects, these 2 projects have been obviously value picked for us. Stage 1 in Tallawong, we've sold pretty much everything in about 9.5 weeks. Pricing you can see there, 500 to 525 for 1-bedders, about 660 to 700 for 2s, and 3s 825 to 945, plus the respective rebates. Plus there are some further incentives that we will discuss with buyers as well, which are above and beyond any other salesperson looking, or sales company selling this project. So guys, look, these have been value picked by us. Sachin has gone over it with a fine-tooth comb, as have I. And look, we honestly can't see any negatives with regard to these. And a testament to that is the fact that obviously this project is selling very quick, and Blacktown's also getting a lot of EOIs very quickly as well.
Just for our listeners, I have already bought a 2-bedroom apartment for myself, and my daughter has bought one apartment of 1 bedroom as well in this complex. And for all of the reasons that I've mentioned today, you know, we mean what we say, and the opportunity is going to close very, very quickly if we don't act now.
Correct.
Thanks, Krish.
No worries.
Now, a few concluding comments. Why should you invest in property? Can you retire with super? Well, I urge all my listeners, okay? I urge all my listeners to accumulate property as quickly as you potentially can, okay? As your budget and your savings allow you. And I say that for a very simple reason. Property prices in Sydney are going to continue to increase. Okay, if I say to any of you listening to me today, would you purchase a property at a price 3 years ago or 5 years ago? I don't even have to go longer than that. And everybody will say, yes, of course. So the same thing will happen in another 3 years or 5 years. We're not buying stocks in the stock market. We're buying property. You don't buy a property and sell it the following year. I know there have been a lot of good stories about people buying land for 550 that I mentioned, and now it's worth 900. All happened in 1 year. That phenomena will not happen every year, okay? You buy an apartment now that settles in 2 years' time, and you're going to be sitting on a profit. You hold that for another 3 to 5 years after settlement, and you're going to be sitting on a much bigger profit, okay? That is the game, property game. And if you had $1 million, I say this to people all the time, if you had $1 million and your house was paid off, could you survive? Absolutely not. Because with $1 million in the bank today, you're going to earn, let's say you earn 1.5%. That's $15,000 interest in a year. 15,000. Can anybody listening to me survive on 15,000? Absolutely not. The reason why Australians are per capita the wealthiest people in the world, okay? Australians are the wealthiest. We've gone past Switzerland nearly 2 years ago. Property in Australia was worth $6 trillion 3 years ago. Today, properties in Australia are worth $9 trillion. Do your sums. Property keeps going up in our country. you got to buy a property as soon as you can afford one. And you keep accumulating properties. Those that are listening to me today that husband and wife are both earning six-figure sums, there is no reason in the world why you could not accumulate double-digit properties by the time you retire. There's no reason in this country, there's no reason in the world with negative gearing and everything else you have. If you don't know how to do it, I'm here to help. I sincerely mean that. I have done this over the last 40 years and succeeded in it. And I have learned from my mistakes as well. And I'm happy to have a one-on-one with any of you to show you how it's done. But please, if you've got equity, you're not using equity, you got to use it to generate your wealth. Okay? You can't just survive on your super, and you can't survive just by paying off your house and putting $1 million savings in the bank account. Cannot. I will stop there and take questions. Hopefully you found this insightful.
Thank you so much, Sachin. Now, we've got a couple of questions here. Okay, first question from Sachin. Sachin, if I have a property in Victoria/Brizzy, would that make sense to sell there and buy in Sydney? What are your thoughts?
That's a very general question.
Sachin.
Thanks, Sachin. It depends what you have bought in Victoria and Brizzy. And it'll depend a lot on your personal circumstances in terms of why you would want to sell. So what I'm happy to do, Sachin, is to take this discussion offline, so we don't take everybody's, and I'd be more than happy to give you my insights into what you should do after I find out a few more facts. Is that okay? Sachin still there?
Yes, thank you. That would be helpful.
Yeah. The reason, Sachin, the reason why I say that is, if you bought the property only 2 years ago, for example, and if let's say it's an apartment in Victoria, apartments have done much worse than Sydney in Victoria because the oversupply issue there has been significantly higher. And so you've already paid the stamp duty, you've already had holding costs and all that type of thing. If anybody is holding an apartment in Sydney or Victoria, my advice to you would be, please do not sell. This phenomenon that I've talked about in Sydney is going to happen in Victoria as well, perhaps less so. Okay, so do not sell an apartment if you're holding. If you've been holding an apartment in Sydney for the last 2 years and wondering why the price hasn't grown, it's because of all of the facts I've just talked about. That does not mean that it's not going to grow in the next 2 years. It will outstrip the growth on the houses in the next 2 years. You can write it down. This is going to happen. Next question.
All right. Surya, thank you for your question. Hi, Sachin. Is it a good choice to invest in Brisbane or Adelaide instead of New South Wales regions to buy a house? How will it be if we were to consider cash flow and from a capital gains perspective?
Surya, good question. We get asked a lot about Brisbane, not as much about Adelaide. And you've seen the price growth in both those cities in the last 12 months has been pretty stellar. Will it continue? Absolutely, I think it will continue. Both those cities will continue in terms of price growth. Now, the reason why Brisbane and Adelaide have grown so strongly in price compared to Sydney, and Sydney has as well, of course, is because it is very, very, very affordable. Both cities have been very, very affordable for a very, very long time, okay? And they are quite decent cities to actually live in. So people will move to Brisbane, people will move to Adelaide. You can live within 20 minutes of the city and have a decent, very decent house for half the price of what you'd pay in Sydney, or maybe in some cases a third of the price you'd pay in Sydney. So that's the reason why those cities were due for a growth. And in my view, they will continue growing in the next 2 years. Listen, I'm not going to discourage anyone, and I don't have any bias towards buying in Sydney. We do sell in Brisbane as well, and I'm more than happy to give insights to people who are looking to invest in Southeast Queensland. which is all the way from Brisbane to Gold Coast, including Sunshine Coast. But listen, again, your individual circumstances regarding your cash flow and capital gains, more than happy to discuss that. Yeah, capital gains. We do have a education session called Tips and Traps of Property Investing. You're more than welcome to join the next time we hold one. We'll probably be in a couple of weeks, and we talk about all the type of taxes. We talk about stamp duty. We talk about capital gains tax. We talk about land tax and why you should diversify your portfolio and so on. So I will cover that more. But Surya, feel free to book a time with me, and I don't charge for giving your insights. I can't give advice because I'm not a financial planner per se, but I can give you some insights through my experience. Okay.
Thank you for that, Surya. Okay, now for the next question. Okay, so how to find suburbs with a huge house/apartment gap? How do we find the gap? What is the minimum gap we should be targeting?
Well, that's a good question. I mean, we would hope that we have done some of that for you to try and pick 2 really good projects. Now, we do have plenty of other projects, irrespective of where you're looking to buy in Sydney. We have a lot of projects in the southwest as well, Leppington, Edmondson Park, Liverpool. I mean, there's no shortage of suburbs in terms of where we can sell you a property. Parramatta, we did not talk about. Just about every suburb. I mean, we can source properties for you. However, in the price point that we are actually targeting, in that 550 is probably at the lowest end of the 2-bedroom off the plan apartment in Sydney. Okay, you're not going to find anything cheaper anywhere in Sydney. Okay, you even go to Penrith and you're going to be looking at that. You go to any of the suburbs, really. Mount Druitt, you're going to be paying that much.
Yeah, Mount Druitt's 550 now. Yeah.
But the reason why we pick a certain suburb and we pick a certain project and we pick a certain price point is because we've been through that research and we are putting our hand on our heart and saying, listen, this is something we really recommend. Now, in 2014, December, 2014 is only just over 7 years ago, okay? A 2-bedroom apartment in Blacktown was in the high 200s to 300, okay, off the plan property. Now, I can tell you that we are selling now at 560, 570 for a 2-bedroom, 580. By June, there will be nothing under 600. That's double. So in 8 years, the price in Blacktown for 2-bedroom apartment doubled, okay, 300 to 600, doubled. Now, I can tell you that between now and 2030, it's another 8 years, prices are going to double again. There will be nothing below $1 million for a 2-bedroom apartment. I'm telling you, property is a long-term game, okay? You keep holding on. You keep holding on and you will gain. That is definitely going to happen. And rents are going up, so that will make life a lot easier for you. So listen, you can do the research. You can go and look at the median prices in suburbs for houses and for land. CoreLogic have a lot of research. But if you want more insights, please feel free to call us.
Thanks for that, Sachin. Thanks, Prithvi. Okay, Badal's got a question. Is there any way to put a deposit in an apartment and sell it before settlement? I can answer that one for you, Badal. Now, with most contracts in New South Wales, yes, you can do what's called a simultaneous settlement at settlement and basically transfer the name over to another person. However, what happened between sort of 2012 to about 2016 is we had a lot of foreign buyers come in who sort of took advantage of clauses in contracts where you could sell before settlement and make a capital gain. Now all that's done. You cannot make a capital gain before settlement. You'd have to sell for sort of what you bought it for. Most contracts have that clause. So in a nutshell, yes, you can settle it before, or at settlement, you can do a simultaneous. However, you can't make a capital gain off that. You'll need to settle. I hope that
The
answers.
short answer is before settlement of the property, most contracts do not allow you to.
Correct. Yeah.
And
Thank you.
No.
at settlement, you can do a simultaneous. So if we find a buyer for you, you do a simultaneous settlement, then you don't have to borrow for the property. Okay, you don't have to borrow. You still have to pay your 10%. You still have to pay your stamp duty. That you can't avoid, but you can find a buyer and do a simultaneous settlement and actually keep the profit.
Yeah. And stamp duty obviously.
I've personally done that a couple of times for myself.
Yeah. So, okay. So that's that one.
Patel.
Pratik, yep.
How about sell a land which I bought 12 months back in the Southwest, invest in apartments in Tallawong or Blacktown? Yeah, listen, I mean, you would have done very well with your land purchase 12 months back in the Southwest.
100%. Yeah.
So well done, Pratik. If you want to sell to buy an apartment, well, I would say you could use the equity perhaps in the land that you already have, and purchase an apartment would be probably the best thing for you. So you get more than one property in your portfolio, because you only need 10%. Now, ideally, if you can extract that equity and lock in an apartment, the bank doesn't really need to know until you have to borrow 2 years from now to pay for your apartment. And a lot of people don't realize that. So you'd be better off actually holding your land for the 2 years. And if you really needed to sell it to settle, then wait for the further growth in that land value over the next 2 years, because it will, as I said, it will still go up in value, albeit maybe less, 6 or 7 or 8%. And in the meantime, you pay 10% and use that arbitrage opportunity to see the growth in your apartments as well. That answers the question, Pratik, but more than happy. You're happy with that, Pratik?
Yeah, thanks for your wisdom. Thank you very much.
Thank you. Rahul, recently there have been bad news where builders break off the plan contracts based on sunset clause or some other clause because basically property prices increase. How safe do you think to invest in off the plan apartments? What should we look for such clause? Yeah, very good question, Rahul.
Very good. Yeah.
Listen, I deal with developers. I consult for developers and I provide advice to developers. And what I caution people when they are buying a house and land package or buying a land, what I caution is, firstly, that if it's subject to DA approval, if it's subject to DA approval, you dot the I's, cross the T's, and be much more wary of what you are actually buying, okay? Because once it's DA approved, and once you've signed off on a land contract and a house contract, then and paid your deposits, then it is not possible for the developer to actually change anything, okay? But pre-DA approval, things can happen. If you haven't paid your 5% for the land and haven't paid the deposit for the house, which those contracts should specify that it is a fixed price contract with no variations under any circumstance, then you are pretty safe. But get your lawyers to have a look at those contracts. I would caution actually, and I think there was a case in Box Hill where it might have been a case where DA wasn't approved. There were some amendments to the DA, and in the meantime, the prices actually shot through the roof, and the buyers were asked to pay additional money to purchase the land.
And thanks for that, Sachin.
Does that answer your question, Rahul?
Yeah, thanks.
Thanks. I'll just quickly add to that as well, Rahul. So with as Sachin mentioned with the DA, so for an off-the-plan apartment, the idea is, so what you're mentioning there with what these guys have done by waiting for the sunset clause to expire in an off-the-plan contract and then reselling it for a higher price. To avoid that, right, in an apartment, buy a project with a DA already in place and construction already started. With those two things in place, right, that gives you a lot more peace of mind, because once the construction's underway, obviously they've got funding they have to keep paying off and keep building and going through that. Then there's there's no chance basically of them waiting for that sunset clause to go and then do all those dodgy things. Once DA is in place, construction started, it gives you a lot more peace of mind as well.
Okay, I've got a question. Thanks, Krish. I've got a question from Piyush. What about investing in regional areas? Like you said, many people are selling for higher prices in cities and moving to regional areas. So I suppose prices will increase there too, and property currently might be more affordable. Absolutely. I have nothing against regional areas. In fact, we have a project coming up in Halliday's Point, which where we will be selling house and land for starting from about 700. Now, I would just caution that you pick an area where there is a number of factors that sort of ticks the boxes again. Don't just blindly go and say, well, I'm going to just pick a regional area and go and buy in Davao or go and buy in Mudgee or go and buy, just anywhere regionally. But if you're looking at selling your house here and relocating to a regional area, of course, lifestyle-wise, I mean, you can get some very good buys, absolutely. I've seen some regional properties and been tempted myself, where you can get a swimming pool, a tennis court, a 1 acre property, not too far, 5 minutes drive to water, and you're only paying about 1.2 million. So listen, there's lifestyle opportunities certainly in regional areas, but as an investor, and by the way, regional prices will continue to go up because there will be more people moving there. But prices in certain areas, particularly close to water, are already ticked up quite a bit. So I just caution that the bargains are not everywhere. Okay, the popular areas have gone up in value quite a lot already. But it depends on your personal choice and your lifestyle choice. As an investment, you need to be a bit more careful where you go and where you invest. The same things that I mentioned before. If you're not sure about a regional area, then stick with Sydney.
Yep.
Sydney has got significant potential in the next 5 to 10 years. Significant.
Okay. Yep.
Thanks.
Thank you.
Thanks, Piyush.
Prithvi, question from Prithvi. Related to property at settlement, can we sell at market price and that profit is subject to CGT? Absolutely. At settlement, you can do a simultaneous sale for an off the plan. In some cases, we have to get the permission of the developer, because the last thing a developer would want is all the buyers are actually... One thing actually I should mention to all of you is when you're buying off the plan, always inquire about how many are investors and how many are owner-occupiers, okay? The more owner-occupiers you have in a development, like Telawang Village has over 75% owner-occupiers, the better off you are as an investor. And the builder, then the developer doesn't have any concerns if you want to sell at that time. If 70% of the people are making 100,000 profit and the 50% of them actually want to sell, do a simultaneous sale, then it does not send a good message for that complex or for the developer. Okay, so but absolutely you'd have to pay capital gains tax. Absolutely, you have to pay capital gains tax if you've held a property for more than 1 year. Okay, after your exchange, if you've had your property for more than 1 year, which in this case you will, then you only pay capital gains tax on 50% of your profit. Happy to expand on that, Prithvi, if you wanted to call me later on.
Yep, Sachin's number's in the chat, guys, if you want to give him a call or send him a text and book in a time to have a chat. It's good.
Any other questions? Conscious of time, I'm happy to take a couple more questions. Hopefully I've answered most of the questions there.
I think we're good.
Jojo had a question.
Sachin bhai, can I ask a question, please?
Yeah.
Sure. Please go ahead. Go ahead, Dharmesh. Sorry, we can't hear you, Dharmesh.
Dharmesh? Okay.
Dharmesh.
Dharmesh just dropped off, I think.
Okay.
While we're waiting for him, please, any other questions? Happy to take one more question. One or two.
Sachin bhai, can I ask a question, please?
Yes. Dharmesh. Okay.
Sachin bhai, I actually recently brought the apartment in Talawang Station, the one you just discussed.
Okay. Oh, yes.
600. Sorry, it was $700,000, and then I don't know. I just changed my mind, and then I thought instead of paying $690, $700 in Thalawong, if I'm getting the 2 apartment in Blacktown near the West Point, the one you discussed earlier as well, I just was just a bit confused, and then I decided not to go ahead. And then after seeing all the interviews, like the discussion today, I think I was just a bit confused. I don't know if you can give me some suggestion on that.
Yeah, listen, yes, I do recall now, Dharmesh, talking to you earlier. Listen, my advice is what I've said tonight is all I hold to all of that, and very strongly, to be honest, because you're buying at the lower end of the market. You're not buying something for 900,000, a million, 1.1 million. Which, we can sell you something in Rhodes for $1 million for a 2-bedroom apartment. But I don't think you're going to get the same level of growth in Rhodes that you are going to get for buying a 550 apartment there or a 670 apartment in Thalawong Village. I really believe that. I mean, it's in this short space of time that I'm talking about, the next 2 years, you're going to see very good growth. Because that area, the population growth in that area is significant. The infrastructure that's coming in that area is very significant. I mean, that Northwest area is going to double in population in the next 10 years. Not many parts of Australia where you can say the population will double in 10 years. Not many parts at all, okay? So there is a lot happening, and we know the demographic of the type of people that are going there. They're mostly professionals. They want convenience, and that's what drives the prices. We have seen it. I mean, we've seen it in Nowest. I mean, in Nowest, you can't buy a 3-bedroom apartment for under 1.35 million. So if it's 1.35 million in Nowest, we're only another four Thalawong train stops, and you can buy a 3-bedroom apartment there for around 900,000. So it's going to catch up, right? My point is, it's going to catch up. Prices are not going to go backwards. So people are going to choose this lifestyle and convenience. And that's what's going to drive it. Now, I can show you, I mean, we can show you other projects which are not close to train stations or metros. There might be a 5-minute drive away, and the price might be $70,000 cheaper. But will they go up as much in value? No, it won't. I can show you, even in Nowest, I can show you a 3-bedroom apartment for $895. But it is way, way away from the metro. So it is the development that carries a premium. The reason why Krish said, this sold, there's been so many sales in a short space of time. Well, you can't underestimate that. Okay, there are other projects I can take you to where they've only done 50 sales in a whole year. Here we've gone 330 sales in 9 weeks. Well, that carries a lot of weight. And when you see that, and you are able to still invest at that price point, and the timing is perfect, you've got to wait for 2 years or 2.5 years in this case for stage 2 before it settles, then to me, it's a no-brainer. That's why I closed my eyes and bought. Okay. And that's that's the message I'm giving to my, if you come to me in 8 months' time and say, oh, I should have listened to you, then it's too late. So I still to look at it.
With regard to
sorry, Sachin.
Blacktown,
I'm just going to actually jump in. Sorry, Chris.
Right.
I guess what Dharmesh is trying to ask is, would it be a better opportunity in Blacktown, or would Thalawong would be a bit better opportunity? I mean, given the circumstance that Blacktown is a bit cheaper and then Thalawong is a bit more expensive, of course. So what would be a better opportunity in terms of growth? Would they grow at a similar pace, or any like Thalawong would grow more, or like in that aspect?
I think the same.
I mean, if that's what you're asking, then I will find it difficult to answer the question, because out of, as I said, 30 projects, we have shortlisted 2. I am very pro both projects. Both projects have potential to go up and go up significantly. And now I'm not going to talk about 1 or 2 years. you've got to hold a property for at least 5 years. Okay. After settlement, you've got to hold it for another 3 years. You pay so much stamp duty, you've got to hold a property. You've got to maximize the capital gain you're going to make on the property.
Right.
So both, if you can add both on your portfolio, add both. These are good properties to add onto your portfolio if you're an investor. So please take your pick based on your appetite. Both are good.
So I have to rob the bank in order to get to a property. No, thank you so much. I appreciate that.
You're welcome. I have time for one more question. Otherwise, as I said before, feel free to give us a call to have any discussion you would like regarding property.
Okay, just one from Jen here. Is there a rental guarantee? Can I transfer the title if my finance is not okay at the time of settlement? There is no rental guarantee, Jen, for these projects. And I'll give you a bit of a reasoning as to why. Rental guarantees, when they're structured into any sort of project, they're already added into the price, right? So you're not really getting an incentive for a rental guarantee per se. And the reason why we don't need a rental guarantee is because the rental market is strong in places like Blacktown and Rouse Hill. I mean, we can rent out a 2-bedroom there in about a week. And as Sachin mentioned, and the media is now finally caught on, that it's all increasing. So rents will be fine. You can, so at the end of settlement, you can do a simultaneous settlement, as we mentioned before. Now, obviously the capital gain side of things, whether you can make it or not, depends on the developer if they allow that. But yes, in a nutshell, if you want to transfer it across, pending the developer's approval, which we can get up front before you even exchange contracts, yeah, we can, not approval per se, but just ask them if it's possible. We can do it.
Yeah, listen, Jen, good question. I mean, I'll just add one thing to that. I mean, as a person who's worked in banking for over 32 years, I can tell you that whenever we saw a property that had a rental guarantee on it, we looked at it negatively. As a bank, we looked at it negatively. And in those days when properties were not being able to be sold, rental guarantees were sort of given as a carrot, as an incentive to get people into it, because they could not rent it out. Now it is sort of, some developers are actually doing it. But with these projects, you can rest assured that there will be a lot of owner-occupiers. And with rentals going up, you don't want to be stuck with a rental guarantee of 4% or something when suddenly you find that you're actually earning 5%. So yeah, I'll just mention that. Thank you. Jojo, you have a question. I might have to take that one offline, Jojo, if it's okay. Okay.
Oh, good.
Unless there's any other questions, feel free. Otherwise, I'd like to thank everyone for listening in. And hopefully you got some insights and my predictions for tonight. Pratik had a question just then. Is land tax applicable to apartments? No. Short answer, no.
It is that technically that if you have got multiple properties and it's an investment, that can still add it onto your land tax liability there, right?
Yeah. So Pratik, so sorry, Christian is right.
Yeah.
So if you have multiple properties in Sydney, there would be a component of your purchase that is added on. So if the threshold for Sydney is, I can't remember what it is now, let's say it's 800,000, then they take all your investment properties, land values, and if it's already 800,000 plus, then you will pay land tax on all of them. Okay. So if the land component of your purchase, let's say in Tallawong, it happens to be $80,000, then you will be paying land tax on $80,000 for that property. But you have to first go above the threshold. I can cover that separately if you wish. Kathy Mehta, you want to ask a question? Please go ahead.
I have an apartment in Parramatta. My opinion, hold. That's what I would say.
Oh, thanks, Kathy. I saw your question. You have an apartment in Parramatta. Should I hold or sell for new? Okay. Listen, if you bought an apartment in Parramatta, it probably hasn't done very well if you bought it in the last 1 or 2 years. but I would say hold on, do not sell. This year is not a good year to sell apartments. You've got to wait for the increase in prices and increase in rentals, rental returns. Investors will always pay more for your property when rental returns are higher. So please hold off if you can for the next 1 or 2 years before you sell.
Thanks, Clarky. And Prithvi, you'd mentioned, can you sell post-settlement? Yes, you can. So in Tallawong, you can sell after settlement. Yes. So basically after settling, you own the property, the title moves to your name, you can definitely sell. Yeah.
Is there a land value in units for land tax threshold? So like I said, Jen, so you got to take all your investment properties in a state when you're looking at land tax, all the investment properties in a state, not counting your own house, okay? So you take the land component of that and the council gives you the land component of that. You add them all together, and once you go above the threshold, which I think in Sydney is somewhere around the 800,000, it goes up every year. So once you go above that in total, then you will pay land tax on all of your investment properties in the state. This is one of the reasons why people go interstate when they're reaching the threshold and they don't want to pay land tax. They go and buy in Queensland or ACT or Victoria. But I can take you through that in more detail. Okay. Thank you all for listening, and sorry it's taken a bit longer than normal, but hopefully we can answer your further questions offline. We would very much like to show you these 2 projects that we've talked about today. Both present amazing value. The Parramatta one is pre-sales. Keep in mind, pre-sales actually Blacktown. Sorry, the one in Blacktown is pre-sales. We have got exclusivity at the moment on pre-sales. I didn't mention that before to Dharmesh. So with pre-sales, you know that once they reach that 20 sales, they're going to actually move the prices up for the rest of the apartments. So that in itself is a good time, always a good time to get into the apartment market when they're doing pre-sales. First in, best dressed.
Thank you, Sachin bhai. Thank you so much.
Okay, all good.
Thanks.
Thank you. Thank you so much, Sachin.
Thank you.
Good night, everybody.
Thank you, everybody. Thank you. Thank you.
Take care. Thank you, everyone. Have a lovely evening.
Yes.
Stay safe.
Yes, yes, thank you.
Thank you. See you guys.
See you.
Yeah.
Bye-bye.
Thank you, guys. Have a good night.
Bye.
Yes.